Good morning, guys. We've made it. It's Tuesday, Monday. What happened yesterday? A lot of fun is what happened. A lot of money, all-time highs, records through mostly tech, right? We're seeing a boom through the growth side, which is very important because portfolios have been so angled to value due to the inflation concern. We've flipped that on its head and actually turned it into, well, inflation is appreciation. Why don't we just appreciate the moment and reflect that on all prices, which is the truth of how inflation works. If there's demand in the economy, then those companies that are in the economy, their demand should increase in the equity market as well in terms of prices. We've used this logic from semiconductors having a supply shortage that should lead to higher prices. What has happened? Semiconductors have higher prices. We've looked at the energy side. If an economy is reopening, what is going to happen to the price of gas? Gas is going to go up. The energy market's going to go up. What about banks? Well, if banks are in a situation where they are plummeting in price because of an event they don't understand, and now we're going towards a land in which they may be able to get interest rates over zero. That's pretty good for banks. Banks go up. Inflation, spending, prices go up. More money is going to be needed for loans, these kind of things. And so we're seeing it now on the growth side. Biggest thing yesterday was Apple, which we finally came out of the low and put some points on. 2.5% on Apple's a large amount of money. This is coming off of about 5% from a week and a half prior, following Amazon on coming out of a low, putting points on a lot on Amazon last week. They put another percent on yesterday as well. These things should continue through this week. I think we're going to get a lot of moves. Talked about this yesterday. This relationship with the options expiring this week. I think it needs to be taken seriously. That you're probably going to see some pretty big volatile moves, even though we don't have volatility priced in. Again, that's due to volatility being priced as a negative. It's negatively correlated with the S&P. Whenever there's a positive move, volatility goes down. That's the opposite of how we look at it through options. Volatility is just price moving beyond a mean, which the mean here has been pretty flat, right? Has been pretty flat, doing nothing. And so if we put points on, it's more volatile. Your premium level is going to go up. That's what we're seeing, and it should increase with that acceleration idea of gamma. Again, you've had a large amount of quantities picked up at one level. I think Apple's the easiest example. You've had a lot of calls picked up in here. Why? Because we've seen the rest of the NASDAQ go up, right? And Apple has not moved. Now all of a sudden it's moved. You now have all the calls that were down here actually start to be in the money and actually have some intrinsic value, that they're going to actually be worth something. And it's going to cause some movements. We saw it yesterday. It's not really hard to go and put some ideas that, okay, this move is probably due to a lot of hedging coming from those calls down here. Again, just a market maker's role, that as they write calls, if they become in the money and are going to have value by expiration, they need to hedge that with an underlying stock. The delta is the ratio. That's the hedge ratio. That delta, gamma, theta numbers you look at. Delta is the actual hedge ratio of how many underlying shares need to be held to hedge that one option position. So as that number goes up, so does the hedge. And we're seeing that should be able to play out more. We'll see how it does today. Retail sale numbers came in lower than expected and sort of lower than before. It looks like there was a shift to services. We've seen this also start to play out. This is also probably an important thing to bring up, is that we should see an expansion of spending. So you do want to see services, for instance, pick up. That's sort of what our economy is anyway. We look at this already in CPI numbers, so the numbers didn't really mean anything today. But just to emphasize, the numbers have changed a little bit, and that's probably a good thing. Healthy for the economy that we're not just continuing to buy. What do we keep buying clothes? You can only buy clothes so many times, right? Keep that in mind. As numbers come up, we should see things change. People don't keep buying the same thing, and if they are, then there's probably something wrong. It doesn't really make sense. That's when we can go, okay, there might be a problem. In terms of today, continuing up aggression, it's really important that as Nasdaq goes through all-time high, right? Now, futures are all break even right now. S&P's up, Dow's up a little bit. It's going to pick up some of those points from energy it lost in banks yesterday probably. It's important that we continue to be aggressive through this move because it's really easy to, if you've already been in a position, right? We've come off a low, take advantage of mega caps. It's really easy to just take the profit and then watch it go up and not know what to do. It's also easy to just sit here and watch your prices go up. So do that instead. If you're in a position, push that and let it continue to push until there's some reason why you need to take profit on it. You need to be convinced to exit a position. This is really specific to mega caps. Others, you can find ways to transition it and find something that's better to buy. You might be in a stock that's a little bit more on the meme stock side. We do see most of those up this morning. AMC's up another 3.5% today, so that's still gaining. But if you are in some of those positions that are a little bit more, it's a little bit more of a meme, or it's just sort of founded on some, less than ideal reasons, then you can look to take profit and enter something immediately, right? You want to have your cash working for you right now. And I've talked about using it in a short-term sort of way. And really, that short-term understanding is not that we're not betting on the market. It isn't going to be up in a month, so we're taking advantage of it right now. What we're trying to do is get exposure to the move right now. And that's what really has made the most money during this time, is betting that the move is going to happen now, not later. Yes, we believe it will be later, but we'll have a different position by then, right? And so as we continue to take positions here, as you have some sort of revolving, let's say, short-term position, right? Your short-term position, you're going to need to exit because expirations. And as you exit those and take profit, you should immediately be buying something else that's short-term and taking advantage of the short-term move that's happening, right? And so that's really this week. So today, the same sort of thing. You're not buying at a high and then just hoping it goes up and then thinking, okay, I'm going to buy at a high and sell at a low here. I think someone said it in chat yesterday, which is like an interesting way to think about it. Spoon said it, is that you're buying a high and selling higher. And we have a very good trend going that is leading to higher prices. And our biggest thing that we look for are higher lows and higher highs. That's something that's established here. And we're seeing it continue, right? And if we're taking trades that are on breakouts and generating momentum, then that's exactly what we're getting. And it's about just following that trend and understanding the timing involved. And if there's going to be a move that happens quicker, we do need those shorter term positions because, again, a long-term position does not have exposure to short-term sort of volatility. So by continuing to take new positions every single day when we can, you're going to get exposure to it. And that requires a level of aggressiveness, and it would look very risky compared to most things we've been doing. But again, we're doing it in an environment that requires it. Otherwise, you're just looking at it. It's kind of shitty to just look at it and go, oh, well, it's been going up. Must be nice for people that are buying it, making money on it. Okay. I mean, everyone can be long on Apple, right? Everyone can be long on Amazon. And you're just in a position for forever, right? You're just sitting in your retirement account forever. There's a difference there because you're not taking the risk. You don't have the risk of the dips. You'll just wait 6 months, right? We take the risk that it could go down tomorrow, right? And so we have that pushed into our options position, but we also get the other side of it if it does gain, right? Which side is more likely right now, right? And that's where you put the probability in, start to use some opportunity cost to understand what we should be in. This is why we took advantage of travel so long, was that there was such a sort of mismatch in terms of the risk reward, because travel in almost all respects should be continuing to go up, right? And the downside was really just revolved around COVID news, right? That was really it. And so as long as we were dodging some COVID news, we're going to be okay. Every now and then you're going to get hit by something, right? And price is going to come down. Right now, we don't really have any negative sort of things in the market. We've talked about the economic data. The market doesn't care. We just had those numbers, highest highest CPI numbers in quite some time, 5% inflation. No one cared. We're bidding growth past all-time high still, right? So the gas needs to stay on. We have to continue to, again, continue to be aggressive and put positions on that maybe feel uncomfortable. I think again the semiconductor sector is the one that you can really take the most advantage of right now. We see UMC up again this morning. I posted a few more charts from yesterday that we saw. This area is probably one that has the best foundation for macro principles of why it should be going up that we've talked about for quite a long time now. This idea of the supply shortage, its ties to everything, especially since we see growth being bought. It is important to realize that as the equity market is driving prices up, it's going to reflect on those companies, and if they are companies that have to buy semis, right, then shouldn't this being a connected, being in conjunction, I guess I should say, shouldn't this also rise with it, right? If any market, any economy anywhere has sort of one market that relies on another, right? They're connected, then they both should be able to rise together if they're profiting on the same reasons, right? Same thing with semis. Semis are the foundation for most companies out there. That's just the reality. And so this is still the one. We have a macroeconomic reason. We have supply reasons right now. And it's also growth. And it's just going to trade like the damn NASDAQ, right? And we've benefited on them for quite some time now, coming out of the low. These are ones that still have some room to actually put points on. So I think right now you can find anything with the semiconductor sort of title sector and take advantage of those still. I think that's probably where most of my activity is right now, if I just put it into perspective, because you can just sort of trade any of them as long as it's got the sector and it's got a price. It's likely going to go up, and you can put some risk on that you just can't do with other things, and you don't even need to know what the hell's really going on. So taking advantage of that, we do see travel up this morning. We are still in most of those positions, but most people probably got shook out from yesterday's move. Buying these every single time there's an opportunity is sort of my go-to slang that I've been saying. It gets harder and harder as it goes down and other things are going up. This again comes down to, okay, you only have a certain amount of money. So if there's something that has been consistently putting points on compared to something that's coming down, you need to look at them in a certain light and understand that this is probably going to take longer to give you profit compared to something else. This again comes down to capital restraints, how you want to trade things. The upside potential's here, but your downside is of course a little bit riskier, and you may get shook out of this position more often than something like we just looked at with semis, right? Semis are going to keep going with the growth stocks right now. And so keeping in mind some of the ways in which the timing works here is important. I would not be putting all your, this is where, like I said last week, your money should not be tied into meme stocks right now when you could have just sat in mega caps and made a fuckload of money, right? It's just sort of ignorant to just sit there and be like, well, this is just better. Right now, it's not. It's just not, right? We know where sort of the flow is going. Use sort of the idea of tiers here of, okay, where should I ideally be? And then where can I go from there that I have my opinion on and things I want to actually trade, and use sort of those breadcrumbs for the other things. That's why we went from this 90% value portfolio to incorporating more growth, specifically through mega caps. And now we've put on these other riskier positions that we believe are making moves, have now obviously been making moves to all-time high. But understanding how the money should be positioned in the timeline is sort of key. And that's where this week I'm just going to be sort of trading like a maniac, because most of the time it's, like I said, this revolving portfolio. That's what I was doing and did so well on sort of all last year. Coming into really the first couple months of the new year, was every week or two, my portfolio would just revolve into new short-term positions as I get transitioned, as I get new breakouts, taking the new one, to exiting the old one, as your delta reaches 1 or your expiration gets closer. These sort of different things. Theta is bleeding me, take the profit. Moves are not coming quicker than something else. I'll take the profit to enter that, right? using that right now is important, and this is where you remove the name, remove sort of the beliefs you have about something, and you can remove opinions too, if need be, and just use the price, right? And so if you see something happening in front of you, you need to take it as is, right? People are not like trying to buy something to trick you into buying it. That's not how these things work, right? Sometimes things look different than they seem. And that's where we have ideas of like a New York, I talk about like a New York fake out. It's not so much that there's literally traders sitting there trying to make you think the market's going to crash so that they can buy the dip. If they're selling it, then again, it equals out if they have to buy it anyway. What's happening is it looks sort of it's a shadow that's not exactly identical to what's actually happening, where we can see selling in the morning, which is actually just rotation, which is what I'm talking about here, where you're selling one thing to go buy another thing. We see this almost all last week and also saw yesterday with some rotation from value to growth. We understood immediately last week that, oh, I wonder why some of this value stuff's getting sold. And then what happens? Growth is just exploding. We see mega caps going. It's really easy to make the connection, right? And so this is where you want to be the one doing that as well. And you don't wait for the market to tell you, right? We just go and do it because we understand that's what you're supposed to do. And so again, this is where you should be playing around with the ability to get in and out of position, go to another if you can right now, right? You don't have to. You have the benefit here of you can just sit in your long positions and take the gains later as they come, right? Things should continue to trend here, even if we get consolidations. Most of them are going to be to the upside. There should not be, again, there's not really this downside risk of corrections and things like that. That's not really where we are. We understand when we're in those moments, but not right now. At least it's not. It's not a, let's say, anxious market right now, right? We're not in a sort of anxious high, and so that should sort of relieve anybody of being like, well, if I go enter something today that's risky and the market, goes down 1% today, tomorrow, how am I ever going to get out of this position? That's a risk at any point that, yes, a long position doesn't have, but we don't have that underlying problem of not having demand. When we are in a situation where we're at some sort of equilibrium and we're sort of at a point where it's a question of whether we have enough demand to continue, then we can actually go into the understanding of, okay, if I buy here, I'm risking that I don't have a buyer. That's not where we're at. We still have retail traders buying shit. If they can continue buying with whatever money that they have, then I'm pretty sure we're going to be okay with the largest equity market in the world, which is sitting at like $35 trillion right now, right? You're going to be all right. So, also to the note, bonds are still being sold to buy equity. So that's one thing. Bonds are stable this morning. Haven't seen any action, so I'm not exactly sure if we're going to get the old bond building trick before FOMC. Doesn't look like it. Looks like we'll get a reaction tomorrow. In terms of the overall market, we may just get a lull of a day, just like that melting upside due to, again, all-time highs on all indices now. With FOMC tomorrow, I'm under the impression that I don't think anyone really, it matters. But we've already seen the data, so we already know what the Fed's going to say. I don't see a surprise coming. I don't think anyone else does. No one cares. That's why we're pushing prices. So I don't see why we would need to just do nothing. But if we do nothing, remember, if the market is flat, that's when we actually have the best opportunity to take advantage of our own positions and actively trade. So I think today, if we do see that in the open, this sort of just, okay, we're doing nothing today, then that's when you really get going and you start to look for things that are making our own sort of moves, right? So that's probably what I'm going to be doing this morning. We'll see how active I get, but I think it's just, again, the more you look at, the more you're aware of, the more you can be a part of, right? And being a part of more, again, casting a wide net, you're going to be able to gain more than the next trader, right? And so I think we have enough names. What I posted last night, again, is mostly semi-focused and focused on this idea, again, of Again, I think it's important to continue to show this idea of this head and shoulders that have formed at a bottom. This is the arc chart. Um, this, of course, incorporates a lot of the things we look at. I'm not a big fan of some of the names, but some of them that I post on the list are in the arc. Uh, just this idea, though, of this accumulation at a low. All these charts that look like this at this low that are coming from a high, right? And I sort of cut off the trend here because it's just, you can look at it however the hell you want. You have wide trends, just it's all a downtrend into the most recent consolidation. Anything that has this, right, that it came from below and it's sort of accumulated and continue to the upside, trending up, are things to look for and to be active in. You see something that momentum's getting going, then be a part of it, right? It's not so much that it needs to be a specific name, right? We have seen that big names, mega caps, and tech companies that everyone knows are really the hottest things going on. It doesn't so much change the percent gain you have. You just know you have demand, and you don't run the risk of something could just happen with a ticker you know nothing about. I'm not the biggest fan of buying things I don't know what they are, even though I preach that understanding that it doesn't matter what it is. I don't even know what the company does. At the end of the day, it does feel kind of shitty to go buy something, and it's hard to have confidence if you don't know what the hell it is. Uh, that's fine, and so that's why we sort of use these things. But again, it's about the price. If it looks, if it looks a certain way, it is that way, and so anything that's again in this sort of pattern, this position, at least the most recent trend with growth, then it's on the same. It's basically on the exact same move, right? And that's where we're at. So buying everything, trading everything. This morning, there's really no interesting pre-market action. We have shit like DraftKings down 11, VRM is down. Somebody mentioned the offering. Oh yes, someone mentioned the offering. There's going to be offerings on everything, and if again, the thing to remember is that if a company doesn't do offerings after they put points on their stock, then they're a terribly ran company, right? It's like if GME never did an offering, if AMC never did an offering. Look at AMC. AMC's going up because they keep doing offerings. It's the only company in the world that actually is taking advantage of the meme stock rally, right? How silly would it be if they never raised capital? What's the point of being public, right? So there should be a ton of offerings. And on the other side of that, remember that we are seeing buybacks still. And I've talked a lot about why we were buying mega caps. They're the ones buying back. Remember that those things are sort of, they are the same. In a way, they are the same because if you have enough cash to buy yourself back, you're technically paying yourself. Even though it's costing you money, you are, in a way, increasing your value, which is on paper. It's not with your liquid cash, but it is in the same way in which when we look at something like Berkshire, increasing their size is directly beneficial to them because they acquire companies. Like these sort of things. So we are seeing that, again, if we did not see these things, it would be a weak market. So that's the point of being public, is to be able to do offerings, do buybacks, dividends, right? These different things. So keep that in mind when we look at some of these. That those are not bad things. They will cause influxes in price, and you will see things like 6% down in the morning, right, on some charts. It usually, though, if you go look at those options, I don't know if anyone's seen this, but for instance, when AMC does an offering and the price has been down, or when GME has done it, or any of these meme stock, you know what happens to the volatility? Volatility goes up. Do you know what the premium is for an option? That's just volatility. The premium level is volatility. And so if volatility goes up, but the stock went down 5%, they probably canceled each other out. In a lot of ways, they usually go up because if the volatility went up, underlying went down. Usually volatility is higher weighted, right? And so keep in mind that as well. Sometimes that can happen where you sell your options because you're like, oh shit, it's down 5% in the open because of an offering, and then the options were actually up. Then they're going up. You're like, well, I'm stupid, I guess. I don't understand math. And I've done that 100 times. So keep that in mind, because I think we're going to see it more. But it's the same way in which we see derivatives come out or buybacks come out and they actually negatively affect your options. Those things are usually not things you have to worry about. I don't think anyone here has encountered some weird, I mean, you might have encountered some weird dividend events in your options, or at least sometimes when there's been splits, it's a little counterintuitive of what exactly is happening to your options. I think those things are we're like in that timeline of all these things happening, right? Which, by the way, what do you guys think? Are we gonna finally get an Amazon split, or they're gonna say fuck it and just let that thing? What are we going? Or we're gonna go on to? I mean, how high can you let it go? 4,000? 4,000, then go. You know what? This is a little expensive. Maybe get a split. We'll see what happens. 2 minutes to open. We'll see what we get here today. Again, we're already heavily positioned. We're understanding the activity. Uh, Again, I think most of my activity is gonna be on the semi side. Otherwise, we'll see. Europe right now is bid. They're doing pretty well. Value is gaining back over there. Asia was pretty mixed yesterday. They're really this morning. And then the commodity market is putting points on. So we're seeing actually gaining here in the open. So you see some of these things are down. These are actually coming bid right now. Oil, 71 and a half a barrel. Sorry, those people that got to drive. Maybe you should stop driving, buy an EV. I don't know. I don't know how it works anymore. On 5 minute. We'll see how this morning goes. I'm gonna be pretty active. So I'm gonna be pretty active. Buy everything, right? That's it. It's pretty easy. Buy everything. And again, the thing I would be careful again if you're in mega caps. Let those things run. Just give them time. Give them some room to breathe. Oh baby, I loved yesterday, guys. I don't know if you know, but tell you what, yesterday really made me happy. Yes, I mean all last week made me happy, but yesterday too. Oof. Tell you what though, the heat is back in New York. I'm not happy about that. All right, let's go, folks. See what we get. Get active. Make trades. Sell shit to buy shit, right? UMC over 2%, VNet 3%, continuing. That move yesterday was nice. Like meme stocks have bid. We are saying are still the commodity side, anything tied to commodities on the equity side is gaining again this morning from some of the take profit yesterday. Retail stores were a little bid this morning. Looks like we're a little break even. Energy, we're getting going. Probably gonna parse the losses from yesterday. The mega caps, of course, you're getting a little bit of take profit from some of the big gains that we've had yesterday. Also from Friday, right? Keep in mind who, what, how much. Probably keep it on the NASDAQ here. Down 25 basis points. Is that the crash? Probably not. Probably not. But keep in mind, take profits in FOMC tomorrow. Understand timeline. Again, transitions on your smaller positions are a big thing. So that's mostly what I'm doing this morning. And also the other thing to remember, if you are, when I'm saying short-term positions and we've been like up in the aggression for the last 2 weeks here. It's important to note again that most of your gains come from overnight. You're not gonna day trade your way to being a millionaire. That's not gonna happen. There might be people out there that say it can happen, but I don't think anyone has ever met someone that's been able to buy the same thing and sell the same thing in the same day, 100 times, hundreds of times a day, and make $1 million. How are you scalping that to make that much money on pennies worth of spreads? It's not gonna happen. The risk you take of holding something overnight with shorter term options and things that are a little riskier, that's where you're getting your gain. When that bad boy opens up 40% higher, that's where you're getting your gain. Not from what happens during the day. Because, again, most of our moves are not, they're not, the premise is not on something that's happening during the day. We're buying and selling for a reason more than what's happening right in front of us. Is the only reason why we're buying the NASDAQ right now because it's down 30 basis points this morning? Is that the only reason we're buying it? No. This just happens to be how it's being traded, and we have some people taking profit from. Are they taking a profit from the last 5-minute candle of yesterday? No, they're not taking profit from this order. Probably taking an order from a month ago. Keep that in mind. I was having a conversation yesterday. This might be interesting. I was having a conversation yesterday, and something to remember is that if you are taking a position that's short-term and risky, doesn't mean you're buying it from someone that thinks the opposite, right? That's not actually what's happening. You don't have this weird 1-to-1 ratio of belief in the market or something like that. Someone that's selling is not someone that thinks the price is going to go down, for instance. In some ways, it's like that, right? But in almost every single case, about 99% of all investors and traders right now are bullish, right? Why are they selling things? Well, why the hell do you sell things, right? Why do you take profit? You can win on both sides. That person that's selling to you is probably winning. They're not losing. We're not in that market where it's so break even that there's a winner and a loser, right? Right now, they're actually just everyone's kind of winning. By them exiting that position for you to enter it and then exit and sell it to somebody else, maybe even back to them, we're driving prices up, creating wealth. That person created wealth and has more money now. And you just did the same thing and flipped it back to them, but now you also have more money. So where the hell's the money coming from? I think we all understand that. I think we all know where the money's coming from, right? Not to say that when things change hands a lot in a day, it somehow is creating wealth every day. I guess that's not true. Is the value of GameStop really 1,000% higher this year? I mean, there's just 1,000% more activity. Meme stocks are doing good. UMC now over 2, PDDs over 2.25. Again, we're watching Chinese tickers. I put DAO on the list last night. We'll see. CCL 2% this morning, catching back up. So again, trouble has come from bid from this open. Fox up 1. We don't see much. There's not much so far this morning, which is going to be nice. I actually do like it for what we're looking for. You can see it's that +1 to -1 range again today that we saw yesterday. Important to note that we have a lot of that. And what did yesterday turn into? A lot of green. If you looked, a lot of bid, big numbers. Things change pretty quick. Red is putting some points back on, almost 2% here. Blades 2%. Wonder why the chart looks like this. There's Apple taking profit from its nice 2.5% a day yesterday. The big boy in the room. Again, you can see, for instance, Facebook continuing, right? 0.5% on the day. These things, again, you're you're getting the sharpest one of the bunch continues to put points on. Looks the opposite. It can then take some of this profit. Doesn't matter, right? It's about the overall trend, not the intraday move here, right? So important to remember what exactly we have. Tesla is the one that, again, is the wild card. So took this trade here on Friday. I could very easily get stopped out this morning. Who knows what's going to happen with this, right? Again, these are very different trades. Important when we talk about the FANG stocks, with Tesla included, that we understand how different this ticker is with Tesla than the others. So, for instance, if I get stopped out here, this is not like on Apple or Amazon when we were just getting stopped out non-stop over here. That is not the same. This is not the same thing. Tesla is a no thank you. So we had a great day yesterday on those options, but if for some reason those go down, then you're out of that position. It didn't work. Nothing. Again, it's not about being right on every position. That's probably important, right? You're not going to be right on all of them. You only need to be right on a few of them. And so that's where you don't double down that loss, is what I'm trying to say. On things like with Apple and Amazon, this is not in hindsight that we're saying it. We understand that on those charts, we want to be buying every low possible. We don't buy the low on Tesla. That's not what we do. We buy the breakout on Tesla, right? It's the opposite. We want to be buying when it's actually going up and actually doing something. If it's going down, I don't want to be buying it. I'm not going to be a part of it. Still in the position now, still doing decent enough. The volatility is really keeping it up. So, but just to put it into perspective, that does happen. I will not be buying some weird dip that happens intraday. I'm not going to make up my own rules just to buy a name. Anything interesting popping off this morning? Airbnb has been doing well so far. So I posted this chart. That's a nice move through trendline. You've got this entire channel here. This probably, I don't really know what's gonna happen. This, to be honest with you, it's a brand new. We just had the IPO. It has the exact same head and shoulders idea that I've been talking about. Has the downtrend from January, and so I'm looking at it just in that angle. There is different news and everything else, so I understand that there are higher risks involved, but it actually increases our volatility. And in a moment where we have momentum in the sort of the growth side of the market, then the extra sort of negatives out there, again, no news is bad news. That's technically what you have here. You have trends being set across the growth market. That kind of just aids the amount of volatility you're going to have on that, which again, volatility for us is good. We want volatility. And so that's going to pump up your number. This is a pretty good start here. So from yesterday into today, I'm pretty decent, happy with it. We'll see. Because again, new IPO charts are difficult to read. And so we have to sort of just throw the entire market on it and just kind of look at it as is. We did see this morning that, hey, people are switching from buying, we saw the retail sales numbers. They're buying some more services now. And so we didn't see service numbers, but it's really not that hard to think that, okay, people were buying Amazon packages all COVID because they were home, and now they're traveling more. Now they're going to buy more Airbnbs. Kind of makes sense, right? Not that that's why things need to be traded right now, because that's a thing. But again, we have to think about things in some sort of logic, right? We don't buy travel because we don't think people aren't going to travel. We just inherently understand that people will travel. People will need to fly a plane to get somewhere else. That's literally how that works. If they took a canoe, then we would be bidding up canoes right now. But I'm pretty sure there's not an ETF that tracks canoe. Maybe somebody knows about one. I was going to say it looks like F was going to start to get some gains back, but that is not the case. All right, so pretty slow day so far. Break even. When you look through, right, growth is taking the most profit because I put the most points on over the last week and a half or so, specifically yesterday, percent yesterday. So to be expected in terms of the numbers. Whoops. You can already see the bid coming back up. The the all-time high action is here. We're in all-time high, so it's important to remember that we have no resistance up here. We have just pure demand, and that causes things to move pretty quickly through here, like what you saw yesterday. That close, it can feel very weird, but remember how normal that is. It's when it doesn't move like that that you go, okay, maybe we're losing steam up here. Or when you put a bunch of bid on, right? You put a really high price in and then start to sell it uh, from sort of the beginning of the day. That would look like, okay, maybe we ran out of steam here, ran out of demand. Usually we'll find an excuse, right? We'll find an excuse, like for instance, FOMC tomorrow. If that happened this morning, where we go bid, let's say we put 0.5% on right here, and then we started to take profit before like 11 o'clock, before lunch, quite a bit. Then we'd be like, okay, we got exhausted here. We got a large upper wick, and we just don't have enough demand left to sustain a 0.5% gain. So now we're back to break even. Is that bearish? No, it just means we're not putting 0.5% on. And we're break even today. Right. Those things are what I'm sort of being prepared for, and that's why we want to be ready to really get going on other charts, because as soon as that market trades flat, we're gonna attack everything else. Until then, we stick with the big boys, right? XLE 1.5% today, so good job to you hodlers in your energy market. I know it's really hard. I know it's so hard to hold that position that doesn't stop going up, but you know, it has been down. It was down yesterday as you made money on your mega caps. I think we're going to see a lot of these numbers that are around break even go green as you see the Nasdaq come through back to the all-time. Watching for again semis to put the moves on as soon as we saw this as soon as the market started to go up on the growth side with the Nasdaq with mega caps. Those semiconductors completely turn around and change their mind because they're tied to each other, right? Things are tied to that average. Quite a bit. I don't think we have anything that comes out today. We might get some more G7 stuff. I think we already kind of got through the important stuff. Maybe we'll get. I mean, maybe we'll get something. I don't know. They're still fucking trying to figure out what they want to do with China. So, if anyone knows what the world should do with China, not to say anything if someone's from fucking China, but apparently the world needs to do something. That's what they keep saying. What the hell are they gonna do? What are you supposed to do? What do we? It's like, how do you get two kids that keep fighting to stop fighting with each other? I don't know. Just keep them in different rooms. But I think that's what they're arguing about today. Apparently, there's going to be some deal made. Usually, that just means more military spending, which we're already doing, which is foolproof, right? It's absolutely foolproof. Do you know how you get somebody to stop doing something? You make more guns, more tanks, more ships. That will get them to stop because showing aggression always helps, right? It's a foolproof way. All right, we're almost green on the Nasdaq. You can see S&P. We are almost there as well. 30 Dow is going to be there. It looks like when energy gives it a few more points, which again, uh, sorry gas prices, but these are the people you have to blame. People in this goddamn Discord buying energy still. You guys are sick. You want your grandmother to be driving broke because she can't afford gas because you drove up the price? That's just wrong. That's just wrong. Facebook 1% on the day. I don't think that chart honestly gives a shit about anything. I mean, it's easily the funniest chart that we have that's actually important in the market. Fifth largest company in the world. Hang up. Equity market. Okay, looks like we're gonna get the green. So again, here's where the semi's gonna get going. UMC, we already have the points on here, but this is where things worry. Saw some take profit from Nvidia. See this move already came through. As soon as we get that bid to come back through, these are the kind of things that we're looking for, right? Nvidia being our most bullish. Most of these, again, I already talked about. At some point, you have to. We've been in this trade. You have to go. You need to go switch this up. uh, this is still my question here: is the AMD chart? If we somehow were able to know what would happen with this chart in terms of a timeline, that would be great, because if you don't know that there's a breakout going to come from this, you just don't know. And so the biggest issue is that, for instance, with Apple and Amazon, we just put the positions on and kept buying it and buying it. Get stopped out, buy it. And there's an understanding with mega caps of the appreciation that's going to come there, and now we're getting paid for it. Semiconductors are going up, right? We like them. It's a part of growth. Everything's going up on the growth side. We're making a ton of money just by buying shit. You can't go buy AMD here. You have to wait for it to break out here. If it does, then I'm going to buy it in the exact same way, but I'm going to remove the name, right? Because it's so bearish to us. This is a great sort of buy-in. It's, again, I don't understand what's wrong with this chart. That kind of makes it more intriguing of the price move that can come. So I do think that this is a thing to keep our eyes on, and to realize that there might be some problems with price here. This is one of those things that this price might not be accurate. And the one thing I've been thinking about, the more we've talked about this and looked at it, because we've looked at all the semi charts, we're doing well with all of them. What's going on with this chart? You look at this area in here of this congestion of price in here, and you can see we're going bid on it right now. But this congestion of price here, and some of this very strange action down here at the low, which we actually took trades from here. If you go look at this goddamn Facebook chart, and remember back in this little, whatever the hell this was. You remember this in here? And we were like, what the hell is this? It doesn't even make sense. This is a mega cap. Mega caps never trade in the same congested area, because it's just sort of, it's completely against the entirety of what makes it the largest companies, and what makes them have the largest flows. When you get flows, it's going to cause a move one way or the other. You don't stay in stasis. This little thing in Facebook here, keep this in mind, and also the move that came into it. If you look at this chart through this area, from sort of presidential election into whatever the hell that thing was in Facebook, and go look at AMD. Look at these moves in conjunction with each other. I'm not trying to like do the weird thing where we're saying like something has happened before and it's gonna happen again. But look at the similarities in here, and sort of understand, okay, there was a lot of action swinging back and forth, but it was very downside oriented, right? Very downside. We talked about the bearishness of AMD. And then you come into this area here, right? And you've got this, what the hell is this price action? It's some sort of consolidation in uncertainty, just like I'm feeling right now, right? And talking about it. There's upside in this sector, upside in growth. They're all going bid. And AMD has not moved for a fucking year. Okay, what's going to happen? It's upside, but when, right? And so trying to learn from maybe that Facebook chart is a good start, because AMD was the most bullish semiconductor we had. It's still the biggest of them, almost, right? And fundamentally, they are the best. And so I think that's something to keep in mind as well. So if there was a fundamental reason. But again, NVIDIA has just been easier. There has been no what the fuck moments, right? And so we trade the leaders, but we're going to keep that AMD chart in mind, because if that thing does show some sort of at least understanding, then I think it's going to get jumped on. And I think retail will like to bring their AMD memes back. Airbnb now 2.25. I'm liking that a lot. Blade as well. The consolidation here. I'm not sure about the timing on this, but I do think it's an interesting idea. So keeping it in mind. 2% today it's warming me up. Still around break even on a lot of things. Waiting for that bid to sort of change the. You can see. So if we look at the list here, most of this area was break even or red, which is why you see a lot of these that were red. Now these are green, and you see things that were further towards the 0.5% loss area now are green. We have some things that are over 1% now up. this is what we were looking for to come through. Ford looks like it's finally changing direction, which again we sort of had questions on yesterday. Continue to take profits off of moves that were large, make a lot of sense, and we're seeing a lot of this sort of flagging sort of price action, which again is due to the short-term risk-on trading we're having. As you go buy something else, you're taking profit somewhere else, but it's short-lived. It's not something that's going away. That's probably going to happen in a lot of areas, and understanding how those things develop is important, which is why just recognizing patterns is going to be important on some of these. Is we're getting pretty hot trading a lot, so again, just being aggressive. Let's see here. Some interesting sideways action here. I don't think that continues, but again, as I said, I wouldn't be surprised going into FOMC tomorrow if we do get some of that sideways action, just allowing us to trade whatever other tickers we want to trade, which I would. This day you're probably gonna get some. You're gonna have, I think, a list like yesterday. Anyone saw that we had like, I don't know, 10 tickers over 10%, like 30 over 5. Those kind of numbers that are just very volatile to the upside. I think at the end of the day here, my list right here, this top of the list, all these are going to be over 5%. Whatever's at the top is going to be over 5%. So trades are out there. You have to find them, make the goddamn trade. Right? If you're not taking the risk to buy them, then you're not going to make money on them. So that's my goal today. Continue the pressure. Corsair, another 4% today. Been a great chart. These moves that are coming from the opener are interesting. It's back above the trend line, which is what I talked about yesterday. It fell through, which would be sort of if we went inherently with looking at everything as a trade. For instance, if you're in the Corsair position, if it broke that support, you'd exit it. If you're breaking back through, you'd be buying it. How I would look at it. But looks like you're actually testing it, which is great. You're bidding through the trend line, pulling back into it as support, looking to bounce on it. It's a great spot there. I don't know so much how much people. This is one of those what do people think about this move questions. This is only 11%. I say only, which 11% is a lot. It's not 30% or something weird where you have this like what the hell are we doing here? This is not so much of a move that you would be like I can't buy there. So keep in mind when we talk about how if something's bid, then that's good. That's bullish, right? And so if it put all these points on, then it can put the points on again. Someone bought it up there. It doesn't make us a fool for buying it either. So keep in mind, it's hard to tell again, new charts, but just for some of those charts that are like that, it is important to realize when things are not, you can be like, this is an irrational move. Why does it fucking matter? Like, when are you ever doing things that are rational? Like, tell me the last time you made a trade that was rational. What did you do? We don't really make rational decisions. We just kind of do what everyone else is doing, right? Or we make a move because we think everyone else is going to do it. Another great day by Shop. Again, our big names doing well. This again, I just did the Italian hands for some reason. What am I doing? This again is based on some of the larger name focus and these charts that have traded on the Amazon sort of paradigm of completely flat over a certain amount of time, swinging back and forth. That when Nasdaq goes all-time high, S&P all-time high, everything growth is going. You're gonna get bid. Other thing to remember, we saw retail sale numbers this morning that were lower, and it's a switch to services. So different. There is some of that service side getting back in the loop, which again are your Amazons, your shops, these tech companies that sort of thrive in that space. I do think that's probably important to think about on a macro level for sectors and the like, and that's why we've seen software companies do well. For instance, we see this sort of overall spending coming through, which it's hard to like explain like the price other than, well, this is something that people are doing. I don't know. Why does Amazon go up? I don't know. People order packages? Yeah, that makes sense. ZS continues. Not sure what that interaction of the trend line is going to be. Trend line today is 218 and a half or so. Probably get that. QRTA went up to 1412, came back down. Very similar idea as well. What we just talked about. We'll see what happens there. Reads continue. These charts are silly. Don't need to look at that. Again, everyone's guess on whatever the hell happens with Chinese stickers. Good luck. I don't know. No idea. No idea. We talked about it on Friday that that was a good candle to buy on going into the weekend and going to the next week. That moves should be turning. I mean, we have seen that, but is it going to put points on? I have no idea. If again, if somebody knew what the hell was happening with these charts, other than we all know that there's regulation issues, then you'd make a ton of money. But for now, keep it on the side, besides some things that we have control over. Higher high, higher low. Pretty tight candle so far. Not much. Trading's going to pick up probably for me here, and it's 10 o'clock. We're going to get some of the big boys coming out, getting their orders through. Probably going to pick up my trading around this time. I'm probably going to trade all lunch as well, to be honest with you. Even if it's just I see something moving, something pulled back this open, and I see the market's heading to the upside, I'm going to take some of those low trades and look to swing them up during the day. No, you will not become a millionaire from doing so, but if there's money to be made, I'm just going to go do it. Right now is the time to do it. We haven't had the opportunity to do that for some time, so taking advantage of the move through all-time high is important. And one of those trades that you take that, hey, it may end up just being a weird little day trade that nothing really happened. One of those can turn into a very big move, right? Because you're buying something that's going bid. That's all that matters. Like, just again, capturing as much as possible. But we all have capital restraints. If you don't have the cash to do that, it's better to just sit in a position and let that ride over time, right? That's always the truth. So there's just, again, a point at which you can't really do anything else. Like, I mean, my bank account is literally the equity market. Feels like kind of strange, so I feel like I should spend some money. Let's take a look at while this is doing nothing here, but there are active things to do. Let's take a look at Bitcoin. This market is still sitting around this 40. We saw the bid come in from the weekend. Yesterday we talked about it. Today break even. We're not really seeing anything, so we're still not seeing any of basically the risk that was here that left it for the equity market. That's in the equity market right now, still pushing meme stocks and a lot of tech stocks. We don't see that leaving the equity market to come into crypto. If we get moves here in crypto, it is important we ask the question of who. If retail traders are still trading in the equity market, then it's not them. It can't be. And there's not just all of a sudden new crypto lovers. That's not going to happen. That's not how people work. No one's looking at this going, and this is such a better buy than over here. No, they would have been buying over here. And when they took profit, they left, right? So any moves again that come from this consolidation, we want to understand where that flow is coming from. Gold continues to come down here. We've seen gold continue to take profit to go into growth. Today we have a higher low. This is again, I don't know if you need to. So, for instance, I've been doing my JNUG trades, Nugget trades over the last month and a half or so. I don't know if right now you have the opportunity cost to go gold right now. This is a better buy than going and buying a mega cap. This is better than buying one of my other growth tech tickers. This is better than buying energy. That's never been the case. It was supposed to be sort of on top of our value trade, how we were trading this with commodities, right? And so again, just building up a portfolio. This is still just a long-term position, right? And so keep in mind the differences between some of these things when you look at those. Same with how we've sort of used conjecture to use X as a swing trade. Every time it comes into a low, we take it to swing it to the upside. That's not really how the commodity side works, right? It's not like, I mean, sure, commodity traders are lunatics because they're fighting over very strange ideas. They're trading futures and they don't even own the commodity, and it drives prices up. Who knows what the hell they're doing? But we are on the speculation and equity side. We're doing a little bit of a different thing here. You're gonna have human behavior reflected on the price, right? This is not the price of steel. This is not whether this company is going to do something tomorrow, right? So some of these things are a little different, and we just turn it into swing trade because that's how the chart operates. That's not how the gold chart operates, right? That thing is just gonna move along, move 0.5% today, 0.1 tomorrow. Not That's a long term, right? It's a long term. It's not really what I want right now. I want to be active. Rides 4.5% off that support. We're just looking at that chart. This thing just popped. What else we got? Ford, nice, love it. We just took that. Took it yesterday. Love it. Getting going. Putting the move back on. Again, we took the trade on the support. Got stopped out. Haven't been able to do anything since. The other thing we just talked about, I think is still important, is the relationship between the Tesla and Ford. We've seen them be opposites. So pretty close to getting pushed out of this position now. We did very well yesterday. We didn't hold as much as I thought we would from some of the gain. I'm still positive on the position, but again, it is important that if Ford is just going to take off here, if this comes down, then we know. And I'm not going to sit in this position, like I said. I will take that Ford chart every single time over this. So keep that in mind. I shouldn't be like, there's no reason why they should be contrary to each other like that, but we do need to be aware that this is happening where people are making it again, this is people making a decision for one thing or another. Do you want to buy this car or this car? The equity market's doing something similar where do you want to buy this or do you like Elon Musk more than everything else in the world? That's kind of the question. So no, I didn't buy it because I like Elon Musk more than anything, but it's still that's the fucking problem. And so if Ford goes up, Tesla goes down, then okay, I'm gonna accept that as is because I understand the circumstances. So I'm not gonna try to be in both. That it's not happening. It's just not happening right now. So what are you gonna do? Hey, uranium's coming up from yesterday's loss. I wonder why the price of uranium changed so much yesterday. Really makes you wonder. Down 6.5% for uranium. You know, really makes you wonder what happened. We just got an influx of supply. You know, just new plutonium hit the market yesterday. Oof. Or are these just a bunch of bozos trading? Probably the bozo angle. This is the bozo chart right here. This is the bozo chart. When you talk about meme stocks in retail, there's nothing better than a bunch of 18-year-olds, teenagers, buying and selling uranium. Does that make any sense? With complex derivatives, by the way. Does that make any sense to you? Probably not. You know, I just talked about how it's literally our fault that we're driving gas prices up because we just keep buying energy and we can't stop. And so old granny is going to be paying $4 a gallon soon. It's because of us. We keep driving the price up. Now, just imagine this angle of investors and traders in the energy market driving prices up, which causes gas prices to go up. Just imagine that with uranium. If governments around the world have to pay more for fucking that commodity because some dumb teenagers bought something for a meme, right? Now that's the real meme. Screw the GME thing and all that. The real meme is to drive up the price of fucking uranium. Do it on some random. Do it on something stupid. Like that's I think where the memes are missing. Go drive up the price of corn or drive up like the do something that's so random that actually affects like an actual commodity or something that actually has some sort of currencies are too big. But I think that's the real meme. I think that's really where it should be. The attention should be put. Find something really silly. I'm trying to think of. I can't really think of anything good. There's a lot of good ones. No mohawk. What do we got? Let's see. How about you don't want to do sugar because all those sugar addicts. More agricultural futures. What do we got? Live cattle. Imagine if you made the cost of cows go up. That's probably too expensive a market. Wheat's too expensive. Beans too much. Rice. Maybe rice. Rice is probably the spread on that is probably a cent. The spread is very small on rice. Maybe do rice. That's what the memers need to go do. Go fuck. Just turn Zataran's rice from $1 box, whatever it is, to $10 by buying rice. Or how about lean hogs futures? Huh? Milk. How about milk? No one likes milk. Go drive the price of milk up for no reason, and you'll see next week in grocery stores the price of milk went up because you bought milk. I think it's just untapped potential, and I think it's probably going to happen. It's probably going to happen. Look what happened when we had gold and silver exploding last year. We had that crazy rally. Everyone was going to sell their shit. They're like, let me sell my Rolly. I can get more for it by melting it. Okay. Let's pump up the action here, folks. Market is doing the pre-FOMC sort of action, it looks. This right here is pretty vindicative. These little swings back and forth. That's a nice flat day right there. I think again, it should always be said when you're when you're trading through all-time highs, you're more than likely getting melt up lunches. That's just sort of again, it's sort of hard to stop that trend from happening. Just again, we have no supply. It's just the same demand almost every day. There's less demand today because of FOMC, but it's probably still be a melt up. So keep that in mind when you are doing some more active sort of thing. So that's where again, I'm gonna probably what do we got? We get 10 after 10. Probably coming up here. I'm gonna start to look for some of those melt ideas of okay, is this the low of the open? And then take something that I'm betting on something just to happen during lunch. Like that's actually you look for some low volatility and go for a little higher during lunch. Probably gonna be doing that quite a bit here. Get active. Oh, getting hot. I can feel it. Anything else? Retail traders are having some fun this morning. Continue to do very well. Which is great. It's honestly great. Holding the same trend. We got the consolidation, which is, you know, it's, I don't even know, but it's honestly pretty, I just don't know. It's pretty damn good. It's actual, you got the tightening that we talked about. It did come down, but this was just a continuation of the consolidation, and then it broke out of that tightening and is just on, it's a continuation trend. That's honestly what it's doing. I mean, some days it looks like it. I think the very strange part is that it looks just like the S&P intraday almost all the time, and that's kind of strange, but it's, the percent is just all over the place. If you log it, this chart becomes very basic looking, which it is intraday, which is where all the price action is. Look at this. It's very strange, I think, to look at. Besides, when you get into here, you have to kind of take it as is, like day to day, and just think about it as just one day of price action. Again, that's how people are treating it. But this is very normal looking. It's, I don't know. It's why there's no volatility. This looks just like this looks like a consolidation that's being broken out and continuing a trend, which is fucking awesome. So again, if you take these trades, they are day trades. I would never hold this overnight. So I'm definitely gonna have some fun with some of the meme stocks. Again, this week talked plenty about the expirations coming up, the game of moves you're gonna see. It's going to happen. It's just math. That's it. But using the meme stocks for the same reason is definitely good. They're day trades. You can easily squeeze 100% trades out of 20 minutes of of risk, right? 20 minutes you can squeeze 100%. That may only be a small amount of money. You may only be able to buy one, couple contracts, whatever it is, right? But they're definitely there. Like it's definitely it's not like some weird bullshit where those trades are not out there to be made. You can easily make those trades. It's just you are in a way gambling, I guess, because anything could happen. But I mean, if it looks like that, then you're taking some risk off. It's not like, again, it's not like January. People have learned quite a bit. I think that's also the cult shit I hate. And I think it's fucking a plague. But all the cultists and all the weird things that they just make up bullshit stories about how things work and how everyone's out to fuck them. I think that shit is gross. That should be banned. But there are smart people that are taking advantage. So small caps, nothing today. Energy, we have stayed flat. Banks taking the low, higher low. That looks like the low there. In terms of new bank trades, talked about it on a Friday. We didn't get it on Monday. I have to think about it. We're gonna have to think about the best way to. These are your long-term trades, so it should be a portfolio perspective. But compared to the money we're making in growth right now, I'm not sure. I want to keep, so I'm always keeping, when I talk about the benchmark sort of sectors of banks, energy with value, I'm always keeping a long-term position with these. In terms of how you add on new positions from these low points where we just have an understanding it's going to continue the trend of the upside, you have different pullbacks, consolidations that are going to happen. I'm just not sure how much of a percent you keep on. I have to think about it. I think, again, I have the growing mega cap sized position, of course, as it gains. I think the one weird thing I've had problems with is as some of these positions gain in size because they're more and more in the profit, it shapes your percent of your portfolio a lot, and it's very confusing. I think that's one of the hardest things of risk management is that as a position grows, it's now a larger percent of your portfolio, even though you didn't do anything. That's what really fucking confused me with Bitcoin is I put 10% of the amount of money I had at that point last year in the summer into Bitcoin. And then it turned into a fucking massive position. And I was very confused about my risk management because now, half of my portfolio is tied to a risky Bitcoin like crypto asset. And I'm like, what the hell am I supposed to do with this thing? Which is maybe why I was very quick on the draw to get the hell out of that position compared to my thoughts. But I think that's another thing is that as things grow very quickly, it's important to remember how your percent is changing. Risk management is always about the percent of a position in your portfolio. Whether you only put a percent into the trade and now it's 10%, you trade it as is. If it's now 10%, then you treat it as 10%. It doesn't matter that you only paid 1% for it. I think that's maybe something we don't talk about, but it's important to think about that as as your positions grow or as they sort of lose value. You think about how that percent has changed in your portfolio, what matters, and that's why it's always about the money. How much money is there? If you could liquidate it all right now, how much money is it? And that's I think I mean I say take the money, put it in your bank. I say that line enough, so everyone knows if it's a amount of money that matters, take it home. No one's gonna ever criticize somebody for taking profit on something to fucking give themselves money. That's for sure. You gotta make it first, but to make it, you have to be good at risk management. Know when to take risks, which again, I think I'll be honest with you. Us taking more risks over the last 2 weeks is fucking an amazing decision. And again, it's just instinctual. You gotta just put it on when it's time to put it on. Well, intuition goes a long way, right? VA 1%. Nice. Continuing the move. Holy shit, guys. Spot fixes at 17. Hold on to your shorts. Why do I even look at? I don't even know why I'm looking at that chart. AMC 11. Oh, they're getting going. All right, we have. What am I? No, markets, bonds, completely break even on yields. Nothing going into tomorrow. Guess we're waiting for tomorrow to see what the old bonds want to do. Not missing anything. We're down 25 basis points on the Nasdaq, which is nothing compared to the 1%. It's probably going to go green again, going into lunch. Follow the leader. Follow the leader. really just want to watch mega caps. Facebook chart is just beautiful. Tesla coming off the low, so we're holding it down there. Coming back up with the market. Everything looking the same. Coming bed. The Apple chart does look a little bit better because of the bid we had early. And it's tightening. We'll see if that's more upside or not. Oops. Switch this to the daily. Actually. Looking at sort of your trajectory here again, we have... This is where I sort of talk about, you can just come up here to this next level on Apple this week. Honestly, this is not crazy at all. We just looked at this. If you just look at what happened in the last week or so, and you look at some of these gains and just throw them on top, that's what we already did. If you look at Amazon, that's what Amazon just did last week, right? These moves are not wild or something. In 1 week, it did 6.5%. That's what happened, right? That volatility is here and continuing. So keep that in mind. How we have some of these things that it's about the trend: higher high, higher low. We already did it. So keep that in mind for some of these and the weird rumblings that you see intraday. I don't know what timeline or time frame you should be looking at charts, but it's about taking some. It's not about taking this as is, right? That's for sure. Give me the bid. What are you doing with MU? Quite some bid. Quite some bid. Also, you perspective traders out there, right now is the best time to become a trader at an institution, a hedge fund, whatever you want. But hedge funds right now, specifically, if you've seen this couple articles that came out, just saw another one on pop up on Bloomberg, are offering. We've already talked about this in the labor market. People are offering a lot more money to go work because, again, sort of all the talent in the world already has a job doing something. So you're going to start to offer people higher wages. Right now, you have hedge funds that are offering you 20% of any of the trading gains, the gain you make on a trade. So if you go work for a hedge fund, they're going to give you the capital to trade. And they're going to let you keep 20% of all the gains. All right, let's say you're trading 500 million. and you make 100 million on it. That's a lot of money. That's 20 fucking million dollars. Don't you want to become a trader now? Yeah. To get those jobs, you need more than just a good trading resume. As in, your portfolio looks good, you make a lot of money. You need fucking master degrees, doctorate preferably. But hey, you never know. Might get lucky. Hedge funds, they had their. I talked about this. Active management had a fucking hell of a year, and the outflows that they had, while they're losing money to outflows, they're still putting more gains on, which is why I had this whole asset management discussion, and said that we're gonna get a part of them because the reality is that they're making money, and it's because active managers, just like we're actively trading here and actively doing what we do, it's better than just doing nothing passively, right? And so yeah, take some fucking smart people, but I mean they're hiring. Everyone's hiring, and you can get paid to do interviews. So if you need a quick buck, just come to New York and get paid to do interviews. You just go, hey, what's up? Yeah, I'm a trader. Yeah, I'm big on Reddit. People know me. I'm a big deal. Paid a few $100. Telling you what, I mean, those are some silly numbers, guys. You want to go make 20% of all the gains, that's just disgusting. Just disgusting. Honestly. That's for entry level. I don't even want to think about it. You'd have fun all day, sweating your ass off. And it's not your money, so you can lose it all. Waiting for some of the things on the sell side to start giving us the signal. Looks like I'm going to be getting active in lunch, like I was saying. For most of those. Like we're going to have some fun here. We are going to have some fun. What exactly is going on here? Quick pause. Banks. Upside coming. JP Morgan is on 155. And that I don't. So we haven't really talked about this chart because I don't really know. We just look at the whole banking. We look at the ETF because it's just the average, and the average is going up, right? Not really sure what all this is, so I don't specifically usually buy JPM. Usually through combinations of GS, Bank of America, but that's a pretty good spot to buy it. So, if you want an individual bank to buy, that's a pretty damn good spot to buy the largest bank. That could be how you start your interview, guys. Listen, been watching that 155. Price pulled all the way down from the high. Came down almost 8% into 155, and I said, you know what? I gotta pull the trigger there. I'm gonna take some risky options, and I'm gonna buy that sucker. And I'm not hoping. I just know it's gonna bounce on that level. And that's why I'm here at this interview today, here at JP Morgan Chase. Because I want to be hired. I want to do more. I want to make money. Because if I work for you, I'll buy more of your stock with your money. Because I know you're trying to do more buybacks, you filthy, rich scoundrels. And I'll tell you right when we should buy it. Right now, it's going to be 155. There's a lot of good reasons why you want to do it because listen, your competition's blowing you by. Do you want to be the biggest bank and be a loser? Or do you want to be the biggest bank to be the biggest bank? Keep it that way. Buybacks. Oh yeah, we are swinging back and forth everywhere for the old break even day. That is going to change. I do think that will change for most individual positions. Do think so. Let's see. TSM. Okay, see our semis like this? This little interaction we're getting with levels in here. This kind of shit is what I'm all about today. All about it. You know what happens above there? See all that stuff? It's called space. You know what happens in space? Nothing. Things can move through there pretty quick. No. 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 Yes. Retail stores just staying on the trend, but sort of break even today. Okay, okay. These candles are kind of silly to look at right now, to be honest with you. Those are pretty silly candles. That's just melting, doing nothing. Guess people do want to look what the Fed has to say from 2 weeks ago tomorrow. I mean, it's not the minutes, but still. All right, where are we putting the low? That's the question. When do we start buying? Right now? 10 minutes? 20 minutes? Somewhere there. Somewhere there, and I'm about to start to buy a bunch of shit. How right now? How right now? I think probably right now. C-Trace says yes. Okay, I'm gonna wait 5 minutes then. 5 minutes. I'm gonna give it about 5 minutes or so. And then we are gonna start to buy all kinds of stuff. Just aggressive little short-term trades. Probably be out by close. Most of them, I want to try to buy anything I buy. I want to be able to buy to hold over the night. But I'm aware that some things I'm just gonna take profit on because I'm just trying to actively trade. Because I'm just sitting in again. Here's the problem. You know, I just said we're gonna put more risk on, and then what happened? Those mega caps turned into major positions. Now they're not risky positions. So like I've lost my outlet. So now again I'm in this just slow portfolio moving position, which is gaining a lot, but I want to trade. There's points to make out there. Some everything and anything. If it's got a fucking pulse, I'm gonna jump on it. And I don't mean that in some really strange sexual fucked up way. This is not the rapey market. This is the the boogeyman market, right? You're not trying to go hurt anybody. we're trying to prosper. Everybody. We really do need, here's the thing to remember, we need everyone to win to continue, right? Which is why you really hope someone's taking profit when they're selling to you and not, that's, we're not buying anything that's at a major loss right now, right? So no bag holder is selling to you. You should only be buying things that are actually bullish. So this should just be winners all across the board. Market makers. Maybe that's what I should say. You should only be buying things that market makers are selling to you. If there's not market makers selling to you, then you probably do not want to be buying whatever the hell that is that you're looking at. Market makers only, which is why we only look at charts that have sufficient volume. They don't have sufficient volume, they don't have market makers. And they're not good. All right. This is where you strap in, folks. I think we can get some larger retail trade moves. So your meme stocks, I think AMC is probably giving you a nice clue. Again, this week you're gonna have some moves that are unexplainable on the underlying. MU now almost 3%. We're getting it. We are getting it. Ford almost 1. UMC pulled back a little bit. Hanging out. All right, let's go. Time to buy. I'm probably going to get off of here so I can focus, but I will stay for a moment. You don't want to hear me heavy breathing all day. We still getting push on energy or what? I think that money's going to transfer back over to growth. Oil, you know what? Oil needs to just stop at this point. It's actually, it's every single day oil's up. It's fucking annoying, honestly. It's, we need to stop whatever the hell is going on there. Because, again, it's hard to tell how much money is actually, how much we actually have because so much is just sitting there. It's just sitting there. We've seen it when it gets taken profit to go to growth, but there's just so much sitting there. It's hard to tell. This shit just looks strange. Because fucking oil's up every damn day. And just every oil company that you can think of. And I like trading them, but when the name starts to not matter, you know, Veronica, Lucy, Christina, they're all the same. Oil companies. Ford's going. Let's go. Give me that. Give me that cheese. MSTR 330. What down here can we buy? Do we want to buy VRM on the support? Probably. Probably. Just an offering. On support, 40? Uh, I didn't expect it to come all the way down to 40 today. Maybe. It's just, you can't tell. It's pretty hard to tell in terms of timing. It's not bouncing or something, so it's consolidating. Maybe give it a little bit of time, but I think that's pretty easy. DraftKings, no. Not yet, anyways. These are all take profit from gains. I don't know what that is. Let's see. Just see real quick here, guys. I don't know if I want to do any bios today specifically. Neo's on a nice support if you haven't taken the Neo trade yet. We still have the same. This position is very strange, so I'm not trying to transition or anything on this right now. It's very wonky on the option side because this trend it's turned into. I don't know if anyone's seen this. If you go look, volatility is not changing on this chart. It's staying the same because it's such a trend right now. I have no clue. This chart is always volatile, and now it's set on a trend for fucking a month. So now it's turned into, it looks like a average or something. So none of the options are moving besides on the underlying, which is very weird because when you buy, it's just doing nothing. It's only long-term exposure. So um, you can basically just buy every pullback and nothing's happening. So if you want a nice entry there, you're not in, you can take it. If you're in this position, it's down 3% today. You've lost nothing. So yeah, that's a very strange one. I don't know. I don't know what's going on with this. Not like the others, that's for sure. Gobi, we continue with. Here's your average on the bios. You can see how our move is consolidating. Uh, this low is a lie. It's bouncing here, but this is not really a low. This is not. Again, this ETF here, it's because of what just happened with the Novavax vaccine and how we saw some of the big names come down yesterday. The average is like benchmarking today on XBI, for instance. So your ETFs on the bio side do not look right. This completely looks wrong. The moves happened yesterday. So again, when you look at some of these, it's some of the shit's just off. So I'm not using shit like that today because it's not technically down. So it's still just trending, which is why I never even did anything on most of these charts. Just continued with the trade or trading them in the same way. I think that Novak thing really made things very weird. Adding like, again, you're adding more supply. So then everyone's going, well, what does more supply mean? Does that mean prices go down? And then it's like, well, those are vaccines. That means more people. Wait, hold on a second. People are going to get healthier faster? Wait, does that mean we need less vaccines? How the hell does this work? Some very strange questions being answered or asked. Bye. This is just melting downwards. Down, down, down. MU 2.5. AMD, let's go. Just do it. Come on. Do it. Come on. I don't think it's going to do it, but I think here's going to be my hypothesis, okay? Talk a lot about how gamma moves happen from options. The derivative sort of sets the tone of the underlying. It's happening this week or it's not. That's the reality. And I think it's going to happen. From the options being bought down here, if it moves out of this range right here, let's put the range in. I'm going to put different colors. We'll use, where is my, oh, you know what? It's because I don't have it on this. If it moves out of this range, right here, which is 80 to 83 or so. If it moves above here, it's going to trigger a gamma event. These contracts are going to be in the money and intrinsic. Everything that's bought in this area, the 80s, calls, 82s, all this shit, this entire area becomes intrinsic, has value, and everything above is going to need to be hedged. There are a lot of options being bought in here because when something trades flat like this, the spread is so tight. There's no volatility. So everything's staying the same price every day. When prices stay the same over multiple weeks, it becomes a lot easier to buy in quantity because prices are not changing. And so if you want a long position, it's very easy to buy something if it's all the same price. You go to Costco, you buy something in bulk because it's all the same damn price. They don't go, well, the first 10 are going to be $5, and then the next one's going to be more. You buy it because it's going to be a discount. You're buying a bulk. Same thing here. You have a bulk of options. Now they're going to be worth something if the price goes up. You just need the price to go up. I think the prices are going up. This has done nothing and it's the most bearish chart. But for some reason, I think it's the one that's going to do something. I wonder if we have news or something. Looks so strange. I don't know, guys. I mean, 82s are being bought quite a bit. To be honest with you. And there's a lot of 85s out there, too, that expire this week. I think the thing that makes me the most I don't know, in the mood that something's gonna happen is that IVs are under 30%. When I see something under 30% that expires this week, that has been trading flat for a couple weeks like this and is very uncertain, then you're betting on higher volatility, which your bet, this would be, is actually not a good straddle, but you're betting on higher volatility. Do you think it's going to do nothing for the rest of the week? Then you don't take a position. But if you think there's going to be any volatility movement at all, you would get paid for it no matter which way it moved, to be honest. Just do some 82, guys. Listen, just do some 82 18s. Come on. Some 8218s on AMD. You got 4 days. Technically, it expires on Saturday. You have plenty of time. 82 AMD, be there, be square. Maybe even do the halves instead. Do the halvers. If AMD went up to 85, that would be like, I don't know, 500% on those. I guess I would need to go up a little bit more than that. Green, green, green. Green. This is red. This is going green. Well. Well, this is where the fun begins, folks. I'm about to trade my life away with a very small amount of money, but it's going to be a lot of fun. So we're going to take a break for lunch, and I mean a break from me sitting here talking. And I'll see you guys this afternoon. And like I've said, I think now's your time to, be a little aggressive, have some fun. And this can be in a very day tradey sort of way as well. And I think you, by just having confidence in your trades, can make money through that. You don't even need to be right. Which is sort of a part of it. And sort of why I want to do it right now, because I have the confidence to just kind of take these trades to the upside and just do it. And I know I'm going to just make some money today. I'm not going to make long-term money. It's not going to carry over to tomorrow. But it will be more money that I'll have to play with tomorrow, sure. So that's sort of what I'm doing. Again, I'm not saying the day trade idea or something is going to make money further down the line, because now you have to come up with new ideas for tomorrow. So that's why it doesn't work. But today, there are things out there that just with confidence you can go make money on. And so I'm going to do that this lunch. Sticking around, having some fun. I think when I look at the retail traders that are dicking around with the meme stocks, the one thing that's true about all of them is that they're having fun. It's not even that they're making money. You know what's fun to me is making money by doing that same damn thing. It's sort of the process that's fun, right? It's really just the process that's the fun part. If you make money, great. If your process is one that makes you money because you have a strategy and you're disciplined, well, then that process becomes a lot funner. It's one thing to have no idea what's going to happen and you don't know what you're doing. That can be fun, which may be a retail perspective, but we know what's happening. We know why things are moving the way they are. These things are not. We've got levels. We know exactly what's going on. So that's the fun part. Right? And so I think the process is fun. So I think enjoying that moment to your, whatever you have a goal of or anything. The goal is not what's going to make you happy. It's getting to the goal, right? Which is usually a lot longer lived. A lot more time in this day than just the 2 seconds of satisfaction I'm going to have when I take profit, right? It'll go away. The feeling of accomplishing something goes away, right? And then you got to do something else. It's just the process itself that'll give you some fulfillment. So I'm going to have some fun today. I think you guys should have fun too. You don't have to, right? You don't have to sit in your long positions if not. But I think everyone deserves some some fun trades, have some fun. So I'm going to go do that. Enjoy your lunch, guys. I will see you guys this afternoon. We'll talk about, break down the market, see what actually happened. Get ready for FOMC. Either way, enjoy. See you then.